Hey everyone, it's Evan here from the Trade Risk on Friday, November 24th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Today's video, we're going to be talking about markets closing at new weekly all-time closing highs. That's the S&P 500, the Dow Jones, the Russell, the NASDAQ, all closing at weekly all-time highs. And we have the VIX, which has now sold off over 15% this week, back towards those year-to-date lows. We're going to cover all of this and some more when we jump into the charts right now. All right, we'll jump in here with the S&P 500, the SPY ETF. You can see we closed up 60 cents here on the day. That was good for just under 0.25% to the upside. And today's Friday. It's a half day of trading, so we only got a few hours in there, but it was enough for new all-time closing highs. And you can see the pattern here on the daily chart is we have emerged from this sideways range that we've been in since the beginning of November, right around 259. That was where we stalled out in early November. We pulled back down to close to 255. Bounce back up, and now we're breaking out to new highs. So if we look at this weekly chart, you can see here we've spent about 3 or 4 weeks moving sideways, and the S&P 500 is finally getting a new all-time closing highs outside of this trading range, finishing up 1% here on the week. The volume extremely light, but we kind of expect that for Thanksgiving week, given the market's closed about a day and a half more than usual. So this pattern here on the weekly chart looking strong once again. The trend remains higher, starting to build some momentum to the upside and taking out resistance and making new closing highs. So there's plenty to like there on both the daily and the weekly chart right now for the S&P 500. If we go to the IWM, the small caps, you can see had a strong week to the upside, a follow through, a continuation week to the upside, 1.68%. That's 2.5 points here in the IWM, and you can see that's good enough for new all-time closing highs here for the IWM as well. And in this market, we actually spent 5 or 6 weeks, actually 6 or 7 weeks, pulling back off of the highs here made in late September around 150 or so. We spent about 7 weeks consolidating, pulling back towards the 20-period rising moving average here on the weekly chart. Last week was the reversal week. This week was the follow through and breakout to new highs here. So the Russell 2000 with those small cap stocks looking strong, kind of tapered out here towards the end of the week, but still had a very impressive sort of 5-day move to these new highs. We remain long this market. We did take some profits in here right around 148, originally in here on this reversal. Slogged through some of this sideways to down, took some profits here, 30% off, and we still have the rest we're holding right now, looking for some more follow through to the upside. So small caps are a position that we have. We still like them. If we go to the NASDAQ, which is really out in front leading this market once again, finished up 37 bips here on Friday. Nice looking pattern here on the daily chart, maybe a bit extended, volume very, very light. But if we go to that weekly chart, you can see we spent 2 weeks basically putting in a little bit of a minor kind of double top right here, right around 154 or so, breaking through that, continuing this trend higher, and all looks well here for the long-term sort of look in the NASDAQ 100. So that's the landscape overall. Really, it's bullish across the board. Not saying it has to go up, not saying we can't pull back a little bit, but for now, from a bigger technical picture momentum, things are looking once again very strong here in favor of the bulls heading into the end of the month. Remember, November ends, I think, on Wednesday is the final trading day of the month in November, and then we head into the final trading month of the year. So very, very much wrapping up towards the end of this year now. If we look at some of the other major markets, we'll go to TLT next, which had an up week, slightly about 30 bips to the upside, 40 cents here in the TLT. We've talked about this. Not much has changed here. Kind of a messy sideways pattern right now, but so far the bulls short term are remaining in control. And until we start to break down, really back below 125, 124, start to fall back down below these this upper level sort of area of basic past pivots up here. I would basically opt in favor of the short-term trend here, which is for the bulls. If we started to sharply reject and head lower, that would cause me some concern. But for now, really just waiting and seeing and being a spectator in the TLT. USO, strong march higher here. Bulls, dip buyers stepped in around this $11 to the 20 period, breaking out to new highs here. Strong finish to the week. good amount of momentum and trend just building here in the USO in oil. So very constructive here, overbought here in the short term, but coming off of this higher low that it just put in, bulls very much in control here. So I'd want to stick with that trend, and basically the exact opposite situation developing here in natural gas to new all-time lows here, or not all-time lows, but year-to-date lows, I should say, in UNG here on Friday, down 4%, really getting hit. Some good volume coming in, completely gapped below and took out this prior level around 620, which is what I really wanted to see it hold if we were going to try and put in some type of meaningful bottom here. That clearly doesn't look like it wants to happen. We're making new year-to-date lows. Things look pretty ugly here for UNG once again. You know, is this something that could bounce in the short term? Sure, it could, but structurally, this is in a real tough spot. Continues to be basically ever since kind of breaking down below this this really heavy area of supply in here between 625 and 650. So natural gas, very tough shape there. If we go to the metals next, you can see GLD finished a little bit lower here on Friday, still kind of holding on to this trend line of support, some of these recent lows, a lot of supply, a lot of overlapping, kind of sideways mulling around here in GLD. Not quite ready to you know, definitively get some strong trending action here in one direction or the other in GLD. It looks like it's still just kind of taking its time in here. So we'll have to wait and see. We'd like to see this really escape with some momentum, with some pep behind the step above 123, or a break below these lows around 121, 120 area to get us going to the downside. If we look at silver, you can see giving back a little bit of the gains here that it made on Wednesday, still very tightly consolidating in this pattern here. It's been consolidating for almost the entire month of November, and this again is still of the belief that we should start to see some range expansion here and some directional moves start to set in for SLV. We remain long still on this silver position, don't have enough reason yet to stop us out. If we start to lose these lows, this trend line 1590 area or so, then we will be out of this long position. But for now, we're still sticking around in here waiting to see which way this market ends up tipping. So that's the metals, that's all of the major markets. If we go through to some of the other sectors, we're going to look at XLY, which has continued to just march itself higher. We've talked about this for the past couple of videos at least. Weekly pattern breaking out to new highs here. XLY still looking strong, a lot of momentum behind it. Semiconductors, nothing new, closing at new highs here as well. Very strong. Technology, same exact footing here. New closing highs, looks strong as well. Those are the leaders there in our space right now. IYR I still think is kind of interesting here as it just perks up and consolidates near these highs after a strong move towards the end of October. And then finally we have XLV, which again I still do like here at these lows, starting to finally perk back up. I think if we get some follow through next week above this, you know, Wednesday's highs above this $82, we can very quickly be back to these recent highs up here, and then potentially, you know, look for that breakout to new highs in the healthcare space. So that's the recap for today. A little bit quicker. It was a shorter week. We covered a lot of this. Not much had changed since our Tuesday video. So I hope you guys had a great Thanksgiving. Hope you're enjoying your stuff. You're happy. Ate a lot of food. Thanks so much for watching. As always, if you like the videos, do subscribe to our channel. And I hope to talk to you again in the next video update.